Many people are afraid of the word debt. Debt is the money you borrow and owe from a lender. How to get out of debt is the subject of countless documentaries, TV shows, and books. However, depending on how it is managed, debt has positive and negative connotations. If used correctly, debt can be a helpful tool to make you wealthy. In this video, we'll share 8 ways how to buy assets and earn money using debts.
By the way, if you like this type of content, be sure to hit the like and subscribe button.
Real estate. Real estate investments are utilized by those at the top of the financial ladder to increase their fortunes further. But everybody needs a place to stay regardless of their financial situation, and buying a home is a way to do that. Though you have the means to pay cash for a home, getting a mortgage can still be beneficial, especially if you're getting a reasonable interest rate and favorable terms. A home mortgage offers advantages over renting, including tax deductions and lower monthly payments. Renting out your newly acquired property is a great way to increase your passive income and gain financial security. However, if you plan to rent out the property you buy, you should be prepared to handle the mortgage payments on your own, particularly at times when the property is still vacant for rent. Real estate debt can be a great way to build wealth, but knowing your limits is crucial. Don't exceed your means by buying more real estate than you can afford. Maintain a 20% debt-to-income ratio for mortgages to avoid financial hurdles. Commercial loans. Commercial loans help you start or expand your business without draining your savings, especially if you already have a solid business plan. In most cases, opening a commercial loan will require you to communicate with a local bank lender, or an expert who can assist you in applying to the Small Business Administration or SBA. SBA is a U.S. government agency that provides loan programs with lower repayments in more extended periods for small businesses. In starting a business, commercial loans enable you to buy the necessary business equipment and supplies, offer high employee wages, and gain tax benefits. Student loans. Student loans are investments in human capital. A student loan is a long-term investment in one's employment prospects and future earning power. You can use them to pursue a high-paying career and improve your knowledge and abilities in a specific field of study. Paying your student loan off may be much easier once you land a job with a substantial salary. Margin investments. Investing on margin allows you to acquire more buying power than your actual money. For instance, if you have $50,000, the broker will loan you another $50,000, allowing you to invest in stock with $100,000 worth of buying power. If the stock's value rises, you can repay the loan and keep the gain. However, your broker may issue a margin call if your account equity drops below a certain level. When a margin call occurs, you have the option to deposit additional funds or sell your stock shares, causing you to lose money. Leveraged ETFs. Investors and traders can increase their returns using leveraged exchange-traded funds or ETFs. Leveraged ETFs from fund companies allow you to amplify your returns or losses between 200% to 300% of your investments. Leveraged ETFs are attractive because of their high profit potential. However, the potential for loss in leveraged ETFs is much higher than in other conventional investments, possibly wiping your assets in a matter of days if you aren't careful. Hedge funds. Hedge funds are heavy users of leverage. Using leverage, they have become well known for generating exceptional profits. Hedge fund investments typically require a high minimum investment, which tends to cater wealthy investors. A hedge fund is a limited partnership between investors whose money is managed by professional fund managers. If the fund manager's investment strategy turns out to be inaccurate, the hedge fund could fail, and you would lose your money. Short selling. Short selling is a form of investment strategy that bets on a decline in the value of a stock. Such a strategy is only suitable for seasoned traders and investors. In short selling, investors borrow stock shares from a third party, expecting the asset's value to fall. When the investors find buyers at the going market price, they will sell the borrowed shares. Traders are betting that the price of the borrowed shares will continue to fall before the due date, allowing them to buy the shares back at a lower cost. Forex Trading. Forex trading involves buying and selling one country's currency in exchange for another. However, unlike at a foreign exchange kiosk, there's no actual physical exchange of money. Forex traders hope for a rise in the value of the currency they're purchasing or a fall in the value of the currency they're selling to gain profit. Debt is commonly believed to have a negative effect on one's financial well-being. Still, if used wisely and managed properly, it can help people make investments and yield substantial returns. There are benefits and drawbacks to taking on debt to build assets. Always keep in mind that debt, whether good or bad, can magnify financial outcomes.
We hope this animated video has helped improve your financial literacy. We do our best to provide actionable tips that are easy to digest and implement in real life. If you want to see more of these videos, please leave a like and subscribe to our channel. Also, comment what makes you feel inspired, motivated, and excited.
Thank you so much.
That's more than enough to help us grow and sustain our production expenses. See you in our next video.